Welcome to the CLiK Trading Education Weekly Market Roundup for the week ending September 26, 2025. Your guide to the key moves, market drivers, and what traders should take away from last week's action. It was a choppy week across global markets. US equities slipped as investors wrestled with tariff news, sticky inflation, and Fed policy uncertainty. In contrast, European markets showed resilience. Commodities stood out as clear winners, while cryptocurrencies faced heavy selling pressure. Here's how the numbers closed. The S&P finished at 6,696, down 0.29%. Dow and Nasdaq slipped modestly, while the Russell fell 0.77%. Over in Europe, the FTSE 100 rose 0.8%, bucking the global trend. Commodities surged, gold up 2.36%, silver up nearly 7%, and oil climbing 5.5%. Digital assets took a beating. Bitcoin lost almost 5%, Ethereum fell over 10%, and Solana dropped more than 15%. In FX, the US dollar index gained 0.35%, with Japanese yen and CAD leading the way higher. President Trump confirmed aggressive new tariffs, 100% on certain pharmaceuticals, 25% on heavy trucks, and up to 50% on imported furniture. According to Reuters and the Wall Street Journal, markets initially wobbled, but stabilized as investors realized the measures were narrower than feared. The Fed's preferred inflation measure, PCE, held at 2.7% year on year. Job growth disappointed with just 22,000 new hires, while unemployment ticked higher. Barron's reports that Fed officials remain divided. Some call for more easing, others worry inflation isn't under control. Bloomberg highlighted that gold and silver rallied strongly, up 2% and nearly 7% respectively. Oil surged almost 6% on supply risks and Middle East tensions, reminding traders of commodities' role as safe havens in uncertain times. Cryptocurrencies continued to struggle. The Wall Street Journal noted that dollar strength and renewed regulatory worries weighed heavily, sending Ethereum down 10% and Solana more than 15% lower. While US markets slipped, Europe showed resilience. The FTSE 100 gained 0.8%, supported by financials and exporters. The OECD projected the UK will face the highest inflation in the G7, around 3.5% in 2025. Meanwhile, the UK and US announced a joint task force to streamline capital markets and crypto regulation. The bottom line, markets are being driven as much by policy headlines as by economic fundamentals. US stocks were cautious, European equities found support, commodities soared, and crypto cracked under pressure. In FX, the dollar extended its dominance. For traders, the message is clear. Stick to process, manage risk, and don't get lost in the noise. At CLiK Trading Education, we know that successful trading isn't about chasing headlines. It's about following a structured process. Our courses help traders build discipline, manage risk, and develop strategies for consistent performance. If you want to learn more, subscribe and follow and check out our upcoming workshops and courses at cliktradingeducation.com.